good riddance to it. We're going to look ahead to prospects for housing markets in 2022. And in particular, we're focusing today on the most powerful force driving real estate markets around the nation so far in the 21st century, which is the one we call the exodus to affordable lifestyle. For several years, Australians have been exiting the big cities and moving their lives to smaller cities and to regional areas. And these locations have been outperforming the bigger cities on capital growth for a number of years. So as we contemplate 2022, the key question is whether this trend is going to continue. And to provide the answers, I'm joined today by Tim Graham from Reventon. Tim, welcome.
Terry, great to see you. And how are things?
They're very good. We're very busy for good reasons, and I'm pretty sure you are as well.
Absolutely. Yeah, we're just off the back of 3 record months, actually. It's been an incredible 2021. I think everybody's down here in Melbourne, we've just been let out on good behaviour. So we're enjoying fruits of our labour, but also being able to get out and enjoy it for a change.
Yeah. So perhaps before we get into the nitty gritty of today's topic, perhaps you could just tell us a little bit about Reventon, who you are and what you do.
Sure thing. So Reventon, our head office is here on St Kilda Road in Melbourne, but we are a national business established in 2005. Essentially what we are is a holistic financial services business. So we have everything that you'd need to grow a portfolio, everything from mortgage broking through to property investment buyers advocacy, and then all the services in between, which include accounting, financial planning, property management, and we basically bundle the whole thing together under one roof. I guess what people really like about that is that the left hand knows what the right hand's doing all the time. So rather than shooting off in 100 different directions, you can call a 1300 number or come into our office here in St Kilda Road, the time permits, and I suppose the permits and things like that are allowing us to get back out and see people again. You can get everything done under the one roof and nice and quick. So yeah, it's been good.
Now, as I said, you're the ideal guest to talk about today's topic, which is about the exodus to affordable lifestyle and whether we think it's going to continue in 2022 and beyond, because I know that your business has been very much immersed in that trend. I think you're probably one of the first businesses in the real estate space to pick up on that trend some years ago, and you've very much been operating in that way for some time.
Yeah, absolutely. I think what probably brought that on, if you go back sort of 10 years ago, typical mum and dad investor, if they thought about investing in real estate, and mind you, this is back when interest rates are 7 and 8%, all they could sort of afford was that $400,000 to $500,000 bracket, which most people just assumed, I go and buy an apartment a couple of k's from the CBD. And that didn't seem to work all that well. We had huge approval rates for new build going up in all of the capital cities with a big influx of international investment. So we could see a big supply hitting the market. And we thought, this is where a lot of people are going to get caught out, that you get caught up as a number. And typically we don't see that growth in apartments for that reason. So whilst I think some markets have changed, certainly at that time for us, we thought there's got to be a better way. And that's when we started to look at the affordable lifestyle options at regional areas all around Australia. So we'll talk a little bit about some of the areas that we focused on throughout the presentation, but for us it was about getting better bang for buck back then. So for the same type of budget, we could get a 4-bedroom home in a big block renting $1 per thousand. So that made more sense to us.
Yeah, one of the things I'd like to do today right at the beginning is kind of put to bed this the myth that's out there, and media kind of has misrepresented this trend as something that's a response to COVID-19 and lockdowns. But I think you and I both know that this trend of people exiting the bigger cities, moving to the smaller cities and the regional areas has been underway for much, much longer than that.
Absolutely. I think there's probably merit to what some of the media's speculation is on people moving to the regional areas throughout COVID. Some might return, and I think there probably is an element of that. But that's certainly not what's been driving it over the last 10 years. And that's why we call it the flight to affordability. People are choosing to not only live in a place that's worth, they can downsize their mortgage from $1 million to $500,000 and get a much bigger home, maybe a bit more land, certainly better lifestyle for a lot of families, the bigger backyards and things like that. And that's been driving that for, as long as I've been working in real estate. But yeah, and certainly in more recent times, we've seen a lot more people who are able to work from home and have that flexibility not to have to travel to a CBD office and work from the comfort of their own home. They're choosing to do that in a more comfortable environment. And I think areas like South East Queensland are certainly seeing really strong trends that would support that.
Yeah, sure. I mean, the numbers show that Sydney, for example, has been losing population to what we call internal migration, which is people moving to other parts of Australia for 10 years, in fact, and Melbourne in significant numbers for about the past 4 to 5 years. And where we at Hotspotting first really noticed the trend was actually in those strong regional cities just outside of Melbourne. Over the last sort of 4 to 5 years, we've seen places like Geelong and Ballarat in particular rise very strongly as a result of this trend. And I know these are markets that you've been very active in with your clients of Reventon.
Yeah, absolutely. But there's a lot of things that have driven that outside of affordability and lifestyle. Certainly, big infrastructure booms and things in those regions supported, but not only Victoria. I mean, Newcastle in New South Wales is obviously another one back in a similar time that we were focusing on. Geelong, maybe even a little earlier than that. That those sort of markets have been taking a little bit away from the capital cities like your Sydney. But then other areas around Australia, like Queensland, that have been attracting people just purely on lifestyle. They want to be able to live near the beach. They want the warmer climate, all those types of factors. Obviously, for Queensland, for a long time, they had the mining boom as well. So people moving for jobs.
So as we've observed it, initially it was very much about people moving to regional areas close to their capital city, but it seems to me that it's rippled out. It's gravitated further and further afield. So we're now seeing markets a greater distance from the big cities being pumped up by this trend.
Yeah, absolutely. I think it's funny, the old saying, when you're looking to buy real estate, you buy it as close to as a capital city as possible. But if you think about it, not just in the more recent trends with the pandemic, but people are choosing to live as close to work as possible. But not everybody's travelling into a capital city CBD. There's a lot of CBDs popping up outside of that. Certainly here in Melbourne in the southeast, there's a reason the southeastern suburbs stretch that far. You've got big CBDs like the Monash precinct, which are huge employment hubs. So that's a long way away from the capital city. And I know certainly in other markets like Sydney, and you've got little satellite cities outside of that as well. It's not really the capital city so much now that are driving a lot of the population to live there just for work.
Yeah, Tim, I think it's one of the greatest myths in real estate that everybody works in that CBD, the Melbourne CBD. Right. I mean, the numbers actually show that in terms of jobs, about 20% of the jobs in Melbourne are in the city of Melbourne. That's the city of Melbourne local government area, which includes the CBD and the near city suburbs. That means 80% of the jobs in Melbourne are actually out in suburban job nodes, like some of the ones you've mentioned. And that's true also for Sydney. It's true for Brisbane. Some of the absolute biggest jobs nodes are out there in the suburbs. And so for many people, there isn't any pressing need to actually, when it comes to buying a home, to actually be close to the CBD.
That's right. Well, we've seen the last 12 months that big businesses are choosing not to bring people back into their offices. There's a lot of companies that have gone and sold down. I've got well, not an ex-colleague, but a guy that I've known for a long time who runs a similar business to us. And in the last 12 months, he just decided to shut down his Sydney office, and the money that he was saving from closing down that office, he ended up investing all of that into technology. So everything he's used to be able to do in an office, he can do online now. And I think it's money well spent. A lot of businesses are trending that way. And it means for their employees, they've got a much more flexible arrangement for their work. It might be that they're only going into the office a couple of days a week and they're not commuting and sitting in traffic every day for 3 hours.
Yeah. And one of the things we've noticed, and one of the reasons why we think this trend has longevity, is that some of the online jobs platforms are increasingly offering work from home as an option. That flexibility has been offered to attract employees by more and more businesses. I think LinkedIn was an example with a percentage of job offers that had that as part of the offer has zoomed in the last 12 months.
Yeah, that's been widely documented globally that that people are, that's one of the biggest preferences when they're looking for employment. Certainly a big study in the US recently that there was something like 40% of people that were within a job had intentions to leave that job within the next 12 months to try to find something that offered that work-life balance. People don't, I think what the pandemic has taught people is it's not all about work anymore, and they, want to spend more time with family. They don't want to be sitting in traffic all day, and this is something that employers are going to have to get used to and have to adapt to if they want to, acquire good talent and keep them.
Yeah, and I think the other thing is that a lot of employers have actually found that this does work. That it doesn't suit everybody, but there certainly there are some people who have found that they can actually be more productive for their employers working that way. As I say, not everybody, but it's sort of working at both ends. Employers finding some of their workforce anyway more productive, but also saving on their office costs.
Absolutely. Look, I can tell you, for us, we've grown significantly throughout the pandemic, and we wouldn't be able to get everybody back into the office even if we wanted to now, without knocking down walls and things like that and having to take over other leases. It's it's a good problem to have when we have to have staff working from home now. It's it's something that we can still monitor everything. Our clients are still satisfied with the level of service they're getting, and it means that we don't have to go having these enormous costs of new buildings and knocking down walls.
Okay, so Tim, I know you've got a presentation to do today with some slides, so now might be a good time for you to share your screen and talk us through some of that information.
Yeah, sure. Well, I suppose to kick things off, Terry, obviously the topic today was around the exodus to these regional areas, but a lot of this is what they've been referring to as the Great Migration. So March 2021, the ABS data shows that capital cities had a net loss of nearly 12,000 people in just one quarter. So that's the largest one on record. Melbourne, no surprise, losing 8,300. And Brisbane gaining a net 3,300. Queensland for that year to date to March 2021 gained 43,900 people. And obviously this is not only having an effect in the way that people are thinking about where they're living, but also where they're investing. So 44% of respondents in a recent survey of property investors said that they would be open to investing interstate, which is actually a huge increase on previous years. And that's obviously because they're not only seeing that with their feet as they're choosing to live in other places, but certainly in the way that they're investing. So today, with that being the topic of discussion, as we spoke about during the week, what I have prepared is a little bit for our the viewers here today, how we go using data like this and understanding these trends. How do we start to utilise some of those smarts when we're trying to find areas to invest in? So I know a lot of people would be familiar with the property clock. And the property clock is obviously very important. It's about targeting the right areas, because obviously we know property markets around the country are very cyclical. And what we're trying to achieve when we're looking at the property clock is we really want to be aiming for the 9 o'clock. A lot of people have talked about trying to buy at the 7 o'clock. My concern with buying at the 7 o'clock, which is the start of a recovery or a real emerging market, is that 7 o'clock to 9 o'clock might represent 2 hours on the property clock, but it can actually turn out to be many, many years. And what I mean by that is buying into areas where you are waiting for infrastructure, you are waiting for all of these school zones to open, all these types of things. It can actually stall your capital growth. So I have people talk to me a lot about, oh, what about this area? What about that area? And a lot of the time I say, yeah, I do like that area. Springfield's a great example in Queensland. I watched that market for 8 years before we decided to jump in there. And it's because I was waiting for a lot of this infrastructure to open. And by the time we clicked go on it in that first 12 months, we saw about 12% worth of uplift. So it is about timing the market right. And the way that we do that, we'll just zoom in a bit on this again. So we use this golden cycle. So we look for infrastructure booms. And there's plenty of that happening, especially off the back of this pandemic, where state governments are really, trying to create jobs. Okay, so there's a lot of infrastructure being brought forward. That's creating jobs. That's increasing population, and in flow and effect of that population and job growth is also capital growth on your properties. So we have a bit of a formula that helps us with that. We call it the PIDE formula, which is a checklist that we go through, which is the population growth. We look at the infrastructure spending. We look at the employment node. to make sure that the local economy is very strong. And the next part about that economy is we're looking at diversity within the economy. So ensuring that we're not looking at markets that are just propped up by one thing. We've certainly seen areas around Australia in the last decade where they might have been propped up by an LNG mine, or they might have been propped up by tourism, and then all of a sudden we have a pandemic, or we have the government changing policy, and all of a sudden these houses that are getting huge rental yields and have jumped up in price in the last couple of years are now hard to rent, and then also lost their value. So it's really important that we're looking not only at what's how strong the local economy is, but obviously how diverse it is as well. The next thing that we talk about when we look at the regional areas is we look at them from a price perspective, right? If we can get into the property market between that sort of 450 to 600 bracket, that's also where we find the sweet spot in the rental yield. Okay, so these are just some examples that we found in recent times, and there's some the most recent stats from CoreLogic on vacancy rates. Not vacancy rates, on rental yields around the country at the moment. And these are your capital cities, houses and units. Now, it's not uncommon for us in some of these regional areas to be getting over 6% as a rental yield. And it's because we can float around that sweet spot of the 450 to 600, we can often get 450 to 600 in rent as well. So that sweet spot in the rental market is extremely important. A couple of areas that we've talked about in the past, which I'll quickly fly through, and you've mentioned a couple of them already, but when we first started looking at regional areas, one of the first areas we looked at was Geelong. And the reason for that, we go back to that pied checklist. The population was exploding because of the affordability and the lifestyle drivers. Obviously, affordability being a much cheaper option than the capital city of Melbourne, lifestyle being 15 minutes away from the Great Ocean Road, and just being able to have the nice country air and great school education and things like that. The infrastructure boom, we obviously had the regional rail link that opened in 2015, which was the V-Line service running from Geelong, Ballarat, Bendigo into the capital city of Melbourne. Still work on that now. It's going to bring it online with the Tullamarine Airport as well. So people that have bought in Geelong will continue to see some really great growth there. The number one employer down in Geelong when we first started looking there was Barwon Health. So health sector being a really big employer of the area, education with Deakin University, a lot of great public and private schools. And then the other big factor was that the state government repurposed a lot of the public service roles. So public sector jobs like WorkSafe, NDIS, TAC and all those into these regional areas as well. So when we first started selling in Geelong, this is actually one of the first packages I sold back in 2014. We sold that package for $376,000. That property is now valued at about $640,000. So that was probably, call that a little bit of a wait for maybe 3-4 month wait for titles and a 6-month build. We're probably 2015 by the time we've completed that property. $360 a week up to $450, and we're looking at 70% growth, which is capital growth of $263,000 in a pretty short time frame. Today, if you were to go and buy in the same estate of Warralilly, that same block we paid $179,000 for, selling for $365,000, and then you still wouldn't be able to build on it until 2023. So the reason I use this slide is to talk to you about, it's not just about price, it's about timing and what these things can mean for when you're actually going to get your property as well, because Victoria right now, off the back of all the stimulus last year, very, very hard to find title land in these regional areas. So that's another consideration that investors should be considering when they're looking at their next move. From there, we went on to the Ballarat market. That's because if we go back to that rental pyramid, we saw Geelong prices really taper up. They started to get to that 550, 560 mark for the same type of property. And of course, the rent hadn't quite kept the same. We see that capital growth far exceeds rent because of income. We're not getting these huge pay rises, unfortunately. So we're not seeing rental income, drive up anywhere near as quickly as growth in a lot of occasions. So that did mean for my investors entering the market sort of 2015, 16, that Geelong probably wasn't our best option at that point. We got in there nice and early. Clients made significant money in there, and they did. But Ballarat represented this similar story. So we had regional rail link again, $460 million redevelopment of the hospital there. We had a lot of public sector jobs at the $100 million redevelopment of the GovHub building. So that houses the State Revenue Office and another 1,000 government sector jobs. So Ballarat Market, first property I sold down there, 2016, 299,000. That property today is worth about 540, which is 80% growth, 240,000 again in capital growth. And ironically, that doesn't seem like all that long ago. I feel like an old man talking to somebody saying this is what property prices used to be back then. It wasn't all that long ago, but that same price of $299 that I sold a house for, 4-bedroom home on a block of land, the exact same block size now, the land itself is worth $299,000. So in 5 years, what used to be able to buy a house and land package, you're just getting a block of land now. And obviously there's a number of things that are driving that, not just your capital growth, but obviously construction prices going through the roof in the last 12 months as well. So from there, we moved on to the Sunshine Coast. Sunshine Coast telling you a very similar story. Huge infrastructure boom, massive new CBD getting created at Maroochydore. The Batinia market there is one of the most successful markets I've seen in a long time. Off the back of a really big $1.8 billion new hospital there. We also have in the Sunshine Coast is the fastest growing university in Australia, the University of the Sunshine Coast, and then obviously the airport at Maroochydore also went international as well. So huge story for the Sunshine Coast. That was one of the ones that I would say has probably been the best performer we've seen in a long time. 2019 selling packages there, $497, jumped up to $600 very quickly, but renting at $650 a week. So it's an incredible story. The Sunshine Coast, not only from a growth perspective, but how quickly their yields have increased as well. I know at the moment, if you were to try to buy something at the Sunshine Coast, you'd certainly be paying a hell of a lot more, but the land sizes have come in a long way as well. So I guess the next question that most people will be asking is where to next? And in line with the topic of today's conversation, do we expect these trends to continue? And I certainly do. Tell me what your thoughts on that are. But this this push for people to get into more affordable housing and living in a different way, there's certainly been that push that's happened throughout COVID, but we certainly believe that we'll continue to see that for years to come.
Yeah, I mean, I certainly do. I think it's a trend that's got longevity. It's been underway for some time. It's fundamentally driven by the pursuit of lifestyle at affordable prices and the ability to work remotely. So it's about technology. It's been given greater impetus by the pandemic, certainly, but it's not fundamentally about that. So I think it's just going to roll on, and some of the areas that are now emerging as alternatives, the ones that you've articulated there, Geelong, Ballarat, they were certainly the beginnings of that trend, but now we've seen in Victoria it's moved to other, like Bendigo is one that's got on board with that very, very strongly. The towns of the Latrobe Valley, and it's spread further and further widely. And in Queensland, which is one of the strongest emerging markets in the country now, regional Queensland. Certainly beyond the Sunshine Coast, we have other markets emerging very strongly, and parts of the Brisbane market as well being targeted.
I think one of the things I'd like for any listeners out there today to think about as well is that, these markets move very quickly. And I do find a lot of people, are talking about Brisbane, and they're talking about markets like your Geelongs and Ballarats today, when the reason I go through and I show these slides is to talk about when we were targeting them. Okay, so it's very, very good and well to hear about a good property market, but a lot of the time, if you're hearing about a good property market from a friend, a relative, or certainly in the media, you could be too late. And these things, I can tell you, we targeted the Toowoomba area maybe only 3 or 4 months ago, and again off the back of a really big infrastructure boom. We're almost done there. There's literally no land left. It's if you speak to a real estate agent in Toowoomba today, they'll tell you they've never seen a market like it. And again, it's a really big infrastructure play with the inland rail link opening up in the next couple of years. That's a train line going from Melbourne all the way through to Brisbane via Toowoomba. Boeing's just invested or signed a deal to do $1 billion aerospace project at the Wellcamp airport there. There's a $70 million Qantas training facility, huge infrastructure stuff, but they just don't have the land there at the moment. And there's literally a handful of estates. There's a one man called Brad the Landman who controls most of the land estates there, and he sends out his price list on a weekly basis, and it's incredible to see how quickly that's moving. And a lot of the estates that are actually on his list aren't even in Toowoomba themselves, are in little satellite townships just outside of it. But the reason I bring that up is because it's very important that your decisions around where you're going to invest today, are current data. These trends that we're talking about, and I'm not going to leave everybody on hook and say where to next and not tell you, but we've been focusing on Toowoomba, and it's amazing how quickly we've had to move out of there, because it's not representing the value that we saw there a few months ago, purely because prices are going up, scarcity of land is driving up the prices, and now it's got to the point where, in order for us to hit our yield and try to find that place where we can get into the budget 450 to 600, again, we've got to move. So there's areas. Sorry, you were going to.
I was going to say, make 2 points about Toowoomba as a great case study. The first one is as part of your PIDE formula, the importance of infrastructure. Toowoomba's become such an important city because of there's a big infrastructure spend there, and it's ongoing, but two pieces of infrastructure in particular, the Wellcamp Airport and the Inland Rail Link, suddenly it becomes a player of national importance. And you mentioned Boeing. Boeing's never actually constructed aircraft outside of North America before. It's now, for the first time, it's doing it in Toowoomba. And that would not be happening were it not for the Inland Rail Link and the new Wellcamp Airport. So suddenly Toowoomba becomes a very important city because of those very important pieces of infrastructure, and their importance actually far exceeds the amount of the investment in creating those pieces of infrastructure. And the other point I think comes out of what you've just said about Toowoomba is that I always believe that people, if they're wanting to invest in real estate, they should always get professionals on board their team, our buyer's agent, other advisors, be willing to spend some money on that. But I think now more than ever than before, people do need that on board, because it's extremely hard for people, particularly those starting out, to operate in a climate like this where markets are so strong and competitive and things are selling so quickly. You really do need professionals on your team helping you through that.
Absolutely. Look, for me, I operate as a buyer's advocate for both new and established properties. And I can tell you now, it's not just about trying to find the right market. A buyer's advocate and a good buyer's advocate will not only help you from identifying the right locations, helping you negotiate, but every state. If you're looking at the stat that I brought up before, 44% of people are open to investing in a state opposite to the one that they live in, so not in the same state. The laws that you're familiar with in real estate differ in every state. So there's a lot of different tips and tricks that a good buyer's advocate can help you with when you're negotiating on property interstate. It's a very, very important factor.
Yeah. And Dilip has just put a comment into the chat box, and I do encourage all of you to put your comments and your questions in either the chat box or the Q&A panel, because there will be an opportunity for us to answer your questions. Commenting that Toowoomba is going to host some of the Olympic events in 2032, and that's also something that is going to bring increased focus on Toowoomba. The 2032 Olympics isn't just about Brisbane. It's very much about the Sunshine Coast. It's about the Gold Coast. It's about Toowoomba, and also some of the northern cities like Townsville as well. So that's also a point well made. And
I'd say on that as well, Terry, that there's so much talk around the Brisbane Olympics, and I think it's a huge thing for Brisbane. Let's also keep in mind, though, that you won't be the first person. If you're thinking about buying in Brisbane right now, there's a lot of other people doing it at the same time. So it is really important to think about that, because you are going to be buying in a hot market. And I do, as much I love Brisbane, and we've been a big supporter of Brisbane. I think I'd say 70% of our sales this year have been in Queensland, but not specifically Brisbane itself. I think there's some really good value outside of Brisbane. Okay, so Southeast Queensland is a big place. There are some really good pockets. I love I've been a big fan of the Springfield region. I love Toowoomba, Sunshine Coast, even as high as Yeppoon now, outside of Rockhampton. There are some really good markets that will still benefit from the Olympics, but you don't have to be specifically in Brisbane.
Yeah, so would now be a time to focus now on some of the places you think are the trending places that people might be considering as alternatives to the ones we've already talked about that are well advanced in their cycle.
Yeah, look, I think again, if we were to talk about the property clock, I'm going to go back to the story of Springfield for a second, because again, this is something that I think anybody listening should focus on, is that it's not so much about finding just a great area and saying, there's great plans in place. There's going to be all this infrastructure. You want to start to see some data trends to say, okay, I'm seeing median prices increase. I'm seeing vacancy rates drop. Vacancy rates are an incredibly good lead indicator, or future-proofing what your investment looks like. If you've got really low vacancy rates, it means people want to live there. Yeah, there mustn't be a heap of investors. You've got really, really good demand. So these are the types of trends that you can see on free websites in Australia. So write this one down, guys. SQM Research. It's a free website. Jump on there. You can put in any postcode, and it's pretty much live data. And the reason being, the way that they draw all of that is because they can look at how many units or how many houses within the suburb, how many of them are actually advertised for rent on realestate.com, domain, etc. So it's a really good tip. Grab that website, use it, because these vacancy rates are a really good lead indicator on what to expect moving forward. Median price growth. A lot of the time, you don't see those trends released from CoreLogic, a true indication, until maybe 3-4 months later. And a lot of the time, median price growth can be really misleading as well. So I don't believe it's a great one to follow. Vacancy rates, in my opinion, is a good one. So one of the first areas that we would talk about, and we probably only have time for one today, but an area that I think is showing great potential. And it's ironic I'm chatting with you about this, Terry, because you've been a big fan of Adelaide for a long time. But for me, we always look at, there's markets everywhere that are cyclical. For me at the moment, I believe that Adelaide is at the right time to be jumping in. Some incredible infrastructure projects happening there. Really incredibly diverse. I mean, they're talking about Adelaide being the next Silicon Valley. So I'll jump in. The slide deck that I've got on here, there's a lot of text on it, so I don't think we'll go through it all today, Terry, but I'm more than happy to share this slide deck with anybody that wants it. So I'll leave my details up at the end if anyone would like to get a copy of it. But really high level. Adelaide, third most livable city in the world. The increase in South Australian migration, which is what we talked about at the start of today's chat, it's the strongest it's been in 30 years. Okay, so this is off the back of a big job boom and infrastructure boom. So here's a list of some of the infrastructure plans that are on. There's a $12.9 billion infrastructure spend, which is going to create 80,000 construction jobs. So Adelaide Convention Centre, 397 million, Adelaide's North-South Corridor, the former Adelaide Hospital, Greenways and Bike Boulevards, Granite Island Causeway Project, GlobeLink, Riverbank Entertainment Precinct, and a really big revitalisation project as well. The big thing with that we've actually avoided in a lot of the areas that we've looked at in the past are mining areas. And it's mainly because, that's what the number one thing that's been driving the area is. It's ironic that, we've always said to people, look, try to avoid the mining areas where you can, mainly because it does represent some level of risk. The thing that I love about Adelaide is we're looking at mining as a really strong thing for this area, because it's not only that we're going there for mining, it's one element of why we're going there. A lot of people probably don't think about South Australia when they think about mining. They're probably typically thinking of WA and Queensland, but South Australia is a really big player in mining. The Olympic Dam is actually the largest open cut mine in the world. We're doing a lot of copper out of South Australia now. A lot of this stuff is becoming really, really big on the agenda for investors from overseas, because they're seeing the amount of copper and uranium that we're pulling out of the ground in South Australia. And a lot of this is on the uplift because of all of these electronic vehicles. Okay, so there's a huge demand for lithium and uranium and copper. So really big tip there for South Australia is look at it for its infrastructure in mining over the next couple of years, because it will expand. A couple of news articles on Adelaide at the moment as well. So new train station, we've got this slide here gives you a little bit more depth on the hospital as well. So a $1.8 billion new women's and children's hospital coming to Adelaide. And then another really big one is that we've secured 3 huge multi-billion-dollar submarine contracts for Adelaide as well. So defence plays a really big part in Adelaide's future growth. For us, when we think about any investment area, it does need to have all that infrastructure. We do need to see population growing, but the thing that Adelaide stands out to us for is its diversification within the employment sector. And last but not least, price. You know, we've got packages in South Australia and Adelaide. You know, they've got a 3 in front of it, so you can be still buying good value in Adelaide for under 400,000. You'll get $1 per thousand in rent. And I'm pretty sure, Terry, you'd agree, as far as vacancy rates are concerned, I don't think you can pick a postcode in Adelaide itself. It's a greater metro area that's got vacancy rates over 1%.
Yeah, no, I agree entirely with everything you've said about Adelaide. Vacancy rates, I mean, vacancy rates are low, ultra low in most parts of Australia, but probably more so in Adelaide than everywhere else.
Yeah.
I don't think there is a single postcode in Adelaide with a vacancy rate as high as 1%. Most of them are closer to 0 than 1%. And it's making it a very strong rental market, a great place to be a landlord. One of the other things about Adelaide that I think is worth mentioning, and what I really love about it, is that it's become, in effect, the Silicon Valley of Australia. It's very much the high-tech innovation capital of the country for alternative energy, which is becoming increasingly important, but also in other areas. It's got a number of notable innovation precincts. And I think it's significant that some very, very major world enterprises that have established in Australia have set up their headquarters in Adelaide, not in Sydney or Melbourne, like Elon Musk with his Tesla battery. You know, what is he, 2nd or 3rd richest man in the world? Yeah. He set up his Australian operation in Adelaide because it's got that growing reputation for being the place to be when you're in that space. Yeah. There's a whole lot of other examples. Technicolor has been involved in the making of movies for a long, long time. Their Australian headquarters is Adelaide as well. Many other examples. So
let's not forget the terrific wine they produce.
Exactly as well. But I think, you know, given that the world increasingly is driven by technology, and our federal government is putting its faith in dealing with climate change and emissions in technology-driven response, Adelaide becomes just increasingly important. And given the value for money that it offers and the incredibly low vacancy rates, I just think the time is right for people to target that city, as you quite correctly point out.
Yeah, I agree.
All right. Look, we've got a growing number of questions and comments coming in. Just before we go to those, and talking about Adelaide, are there any particular parts of Adelaide that you're targeting with your research at the moment?
Look, we have been doing a little bit out in the northern area, but the first thing I would say is we're not really the type of business we don't operate off a stock list or anything like that. The first thing I would say, people, is we really want to understand their circumstances first. Adelaide might not be where we'd recommend. Really want to look at what they've got first. So when we typically meet with a client for the first time, we do just a discovery meeting, find out, you know, what are your goals? What actually do you own already? What's your budget? Have you got a pre-approval? All these different types of things before we'd start to be recommending anything. So look, I always think that if you're looking to invest in property, don't start with property. It sounds very strange, but you know, so many people get it around the wrong way. We really want to look at what you've got to begin with to make sure what we're talking about, you know, today is going to be suitable for you, because you know most clients have got you know, what I sell to that person is going to be very different to that one. So I would say the northern pockets have been where a lot of our, you know, first-time investors and second-time investors have been buying, or people that are looking, you know, for something outside of Queensland because they might already have a property or two there. So it's giving a really good diversity place, so that you don't have all your investments in one basket. But there's certainly some pockets all over, and that'll treat different budgets as well throughout Adelaide.
That's an incredibly important point. In the various forums I do, including this one, I get asked a lot of questions, and a lot of people ask questions and they think that there's a correct answer to that question. Where's the best place to buy right now? Where's the best place to go for capital gains? Where should I be buying? And what people tend not to understand is that the answer actually can be different for everyone. If you ask the same question of 12 different people, there might be 12 different answers depending on their circumstances, what they already own, what their objectives are, what their price range is, how much they can afford to buy, and all of that. And I think that's part and parcel of what you do for individual clients at Reventon.
I think a good example of that, Terry, I had a client last week who were based in the Gold Coast. They've been wanting to invest in property for some time, but you know, for one reason or another, things always got in the way. And they say life happens as you're planning it. So they hadn't got around to it, but they decided it was time to bite the bullet. And they were really surprised with how in-depth the discovery meeting went into what their goals would be, because they thought they were just going to say, we want to buy an investment property, where do we buy? But for them, it's really about identifying what their life looks like in the next 5 years. They were originally going to be looking at something near to them in the Gold Coast, and they were prepared to spend about $800,000. And we're like, you told us 5 minutes ago that you're also wanting to build your dream home. And the dream home had a shelf life of 5 years before they wanted to do it. I said, if you buy that $800,000 property today, even if it jumps up over 1.2 in the next couple of years, because it's your investment, you're going to have that interest only, you're still going to owe $800,000 on it. So the reason I give that example is because without the right advice and understanding, parts of your goals, it's really, really difficult and can be very dangerous buying something just for the sake of buying something, because it could prohibit what those future goals look like. And the last thing you want to be doing is just saying, here, buy this property, and then you come back to us in 2 years' time and say, but I want to be able to buy that house over there as well, and you can't. So really good example of that client. They end up buying in Toowoomba. It turns out where they really wanted to end up in a couple of years' time as their dream home, they're now going to go and rent that, and they're turning their own home into an investment. So they've gone from having just one property, they've now got 2 investment properties and renting elsewhere as a rent investor, because they want to be closer to the beach. And it actually means they're actually making money out of both properties, the one in Toowoomba as well as their Gold Coast property. That's helping contribute to their rent near to the beach where their kids want to be. So that's the type of story that people should be thinking about, because it's not just about going, hey, I've got a budget of 600,000, let's go and buy something.
Yeah, and just developing that point, and also referring back to one of your earlier points, the importance of a good rental yield. I think what people perhaps don't appreciate is that if you buy a $800,000 property, you're almost certainly going to have a low rental yield, and it will be negatively geared. It's actually costing you money to own it. When you go back to the bank for the next property, they're going to be perhaps less enthusiastic about lending to you in those circumstances. Whereas if you've got your initial purchases were properties with high yields, which means they're probably going to be positive cash flow, it's going to be easier to go back to the bank and get finance for the next property. I think that's very much part of the philosophy.
Yeah, look, I know you've got some questions to get to, but I'll make one more comment on the higher yields. And a lot of people see, Facebook advertising, and they'll say, hey, you can get this, 12% yield, or a 20% this, 20% that. I'd like to point out to people that anytime you are, looking for something that's giving you that higher yield or the higher growth, you're typically going to have a higher risk. Okay, and the other part is anytime you're trading, you're going for something higher, whether it is growth or yield, you're probably going to trade off on the opposite. So if you're chasing high yield, you might not get good growth. You're chasing high growth, you might not get good yield. I believe that there's a really good median in both of those. And an example of that, not that I've got anything against dual keys or NDIS or anything, but they do typically get the higher rental yields. When you think about selling that property in a few years' time, who do you think is going to be buying that property? It's probably going to be an investor, because an NDIS property is not going to go to an owner-occupier. A jeweler, maybe an owner-occupier buying one side, but typically they're going to appeal to investors because of that higher rental yield. So in years to come, when you decide that you want to sell that property, you'd want to hope there's investors in the market, and also be prepared that they're probably going to want the best price possible. So there is a median in this, in my view, and everybody has their own view on which way to go. But I do believe that there's a really good sweet spot when it comes to growth and yield. Regional cities tend to give that, and I like to build a good investment home, not a cheap, nasty investment just to get the price down, but buying something and putting in the right amenities, that are going to give you good resale in the future. That'll give you good rental yield and good growth.
Yeah, look, I totally endorse that, Tim. I think it is possible to have the best of all worlds if you choose your location well and understand the dynamics in property markets, buying in a good regional centre with a high yield, but has all those qualities you've talked about, growing population, diverse and strong economy, creating employment. You've also got great potential for capital growth. Let's turn to some of the questions and comments that have been coming in while we've been talking. And here's one from Peter, which perhaps speaks to your earlier comments about buying at the right time in the cycle. He's asking whether there's any growth left in Ballarat, or has it had its run?
I think it's had its run. So there, I typically find, and I don't want to make this sound like a negative thing about the regional areas, but there is typically a bit of a glass ceiling in these areas as well. Okay, what I mean by that is income growth. We don't typically find, and maybe we're going to start to see some of these trends of, higher income in these now that people can work from home. But typically, we don't see those areas having a really high income, and we've already seen such huge growth in Ballarat over the last couple of years, like double-digit growth the last 3 years in a row. I still love the area, I think I just changed the product a little bit too. It might be a renovators play there. Buying something new, there's a little bit more of a struggle now because the land prices have gone through the roof. You've got huge title delays in a lot of areas as well. So I do think that there's much better value elsewhere.
Yeah, I totally endorse that. I think people should be looking for places that have similar qualities and the potential to do what Ballarat has done for the last, say, 4 years, but a little bit earlier in the cycle.
It's and I'd say, Peter, I on the subject of Ballarat, so many of my clients made money in Ballarat that I actually, when I started looking at Toowoomba, because a lot of my clients that did buy in Ballarat were actually from Melbourne. So when I was showing them Toowoomba, it was a little bit of scratch the head. It seems so far away from Brisbane. So it was a hard thing for some people to get their head around. And I actually created a document called Compare the Pair. And I was comparing Ballarat to Melbourne and Toowoomba to Brisbane. It's uncanny how similar they are. Travel time, population side, infrastructure, the local economy, what's driving it. Same 4 major industries driving the local economy. So use Ballarat and I say success leaves hints. Why did Ballarat grow from here to here? What was driving it? It's that pied theory. If you go and find that pied theory in other areas, you're onto a winner.
Yeah. And when you've got that new airport and the inland rail link heading your way, it's almost a case of distance from the capital city becomes irrelevant because that's such powerful forces.
That's right.
Let's see, Maria asking about the northern areas of Brisbane heading up towards the Sunshine Coast. Is there anything there that can be considered to be near major employment hubs? Do you have any thoughts about that part of Brisbane?
Yeah, the pocket between sort of North Lakes up to the Sunshine Coast through the Moreton Bay region there is quite exciting with what's happening around Caboolture. And obviously the new marina that's happening there. So there's big job creation going through there. One thing that I will say is probably relevant for you at the moment, though, is do keep in mind that it's still part of Brisbane. And I do believe that a lot of Brisbane is probably in that, I hate to say this, but probably a little bit overpriced for what you're getting at the moment, only because they've had such a huge influx that I do think that land developers there are probably edged up a little bit too quickly. That's all I'd say. It probably value for money on where it was 12 months ago, very different. It's still an exciting market, but just be careful on how much you pay.
And one of the other factors in that region, you mentioned the Moreton Bay region, the north, the new university campus, which hasn't yet been able to function normally, but ultimately it's going to have 10,000 students going there. It's going to be a major generator. Tim was asking about Yeppoon, which is coastal Queensland, central Queensland. We tend to regard it as the outer seaside suburb of Rockhampton, which is a regional city that we like quite a bit. How do you feel about that one, Tim?
Yeah, we've been doing a few sales in Yeppoon for our clients recently. Incredibly strong rental yields. It's obviously coastal area as well. They're calling it the next Byron Bay. I don't know who they are, but it is certainly an area that is picking up a lot of migration. I've had a lot of people that I know in property space in the Gold Coast, that have been selling their properties at the Gold Coast for record prices. And I asked the question, where are the people that are selling in the Gold Coast going? And everyone says Yeppoon. So it's it's probably a smaller population base than what we would usually target, but you're 30 minutes away by train to Rockhampton, and an easy drive to Rockhampton as well, to a major city as well. You get really big incomes that are residing there as well. There's still a lot of fly in, fly out work that happens out of Rockhampton. And I think, again, touching on the mining side of things, I think mining, people have been probably been burnt in the mining areas in the past and probably looking at that as a negative, but I do see the mining up there actually being a positive at the moment. Still want to make sure you're not paying too much, you're getting the rental and you're not buying it because of mining. Yeppoon has the best of both. So you've got that lifestyle play, affordability play, incredibly strong rental yields. Like you'll get, over $1 per thousand in that region.
And Rockhampton does have a very, very big infrastructure spend underway, some particularly transport infrastructure. That's another driver there. One of the points you just made, and it speaks to the general theme today, which is what's the longevity of this trend. One of the things that we're noticing, which you just touched on, is there's kind of a ripple effect happening with this trend. Someone will sell in Melbourne and buy on the Gold Coast. The people who sell to them on the Gold Coast are moving somewhere, and quite often, as you say, they're moving to somewhere like Yeppoon. Another target area for that is Hervey Bay, the Fraser Coast region. So kind of it's a series of people selling for a price and then buying somewhere else a comparable property for half the price and having money left over. So it's sort of rippling up the coast of Queensland to a certain degree.
There's a big player in that is not just people are thinking about this migration as people that are still in the workforce. There's a lot that are leaving the workforce with this aging population. I can tell you, Yeppoon's got an estate up there just outside of the state, golf course estate, stunning location where they're actually building quite unique developments now, which are quite high yielding as well, where you might have 4 elderly singles that are living in the same house. Every one of these homes are designed with an ensuite and walk-in robe and everything like that. So they've got their own private living arrangements, but they've got shared kitchen facilities, living areas and things like that. And they're actually managed as one investment, but it means that they've still got the ability to live in with other people without having to be living in a retirement home, so to speak. So there's a big push for the Yeppoon market for a lot of people that don't want the hustle and bustle of the Gold Coast or the Sunshine Coast and want that more relaxed lifestyle up at Yeppoon.
Yeah. A number of people have just asked again for that website you mentioned earlier. You're referring to SQM Research.
SQM Research.
I have to say there's a couple of websites that I have open permanently on my my desktop computer because I refer to them so much, and the SQM Research is one of those for vacancy rates, but a whole lot of other data that's useful for research, which is freely available. It's a great resource. Okay. Referencing Northern Adelaide, we discussed earlier, and Chris is asking or commenting that he believes that Gawler is exceptional, but I would tend to agree. It's certainly in our reports at the moment. Have you looked at that market?
It's a little bit further north than where we are. We're sort of that Monopara, Blakeview location, because it is a little bit closer to the infrastructure. Now, in saying that, nothing wrong with Gawler. I haven't actually done much in it yet.
Yeah, we like it for a number of reasons: affordability, improved transport links, but also it's the kind of the gateway to the Barossa Valley wine district. So it's got that lifestyle element that's very much part of this trend. I think if you lived in Adelaide, for an investor, they think they would see value in Gawler like we do here, seeing value in Geelong or Ballarat in the past. But for an interstate investor, again, that mindset when we're looking on a map, we go Gawler there, Adelaide CBD there. We've got to get out of that mindset. But for a lot of my clients, they sort of see that they're, I can get into Monopara or Blakeview. They can just see that there's a lot more already there. So nothing wrong with Gawler whatsoever. But for a lot of investors, they'd like to be a little bit closer in. Yeah. Darren's asking about Mount Gambier. Does it fit in this area for Adelaide? I think it's like some distance from Adelaide. In fact, it's right at the border with Victoria. Do you have any thoughts on Mount Gambier?
Yeah, it's certainly an up-and-coming area as well. It sort of get through the Southern Hills to get through there. So there's a bit of a gap between Adelaide and Mount Gambier, but certainly, it represents good value for money again.
Okay. Dylan's asking about apartments in the Gold Coast area. It's probably not a market that you'd be.
I'm settling I had a client that bought an apartment on Chevron Island there. Got right at the start of the pandemic. He bought a 2-bedroom apartment that sort of looks back towards Surfers Paradise. Paid $650 for a 2-bedroom, 2-bathroom, huge balcony. I think he'll settle with about $200,000 worth of equity in it. Gold Coast market, both in rental yield, low vacancy rate and growth. It's between Gold Coast and Canberra. They're probably the 2 markets that we do look at when people do want apartments. And again, this comes back to what I was talking about before. There isn't a one-size-fits-all with everybody. Apartments, a lot of people shy away from and say, oh, you can't make money in apartments. You certainly can. You've got to be, picky about what you want. It's got to have something different. It's got to have a nice aspect. It's got to have something so it's not it's a bit more individual than anything else that's in the project. But certainly we don't have a big appetite for the cookie cutter approach. That's just at a price point. We can get good house and land packages for the same price as apartments in capital cities by going to great regional areas. So that works out to be a better play for most. But certainly Canberra and the Gold Coast are great markets for people that do want an apartment in their portfolio.
Yeah, I think the Gold Coast is a great example of the power of this trend we're talking about today, the access to affordable lifestyle. By all logic, the Gold Coast market should be struggling because the international borders have been closed, the tourists can't come in. That's what their whole economy is based on, and yet its market's going off, and it's buyers out of Sydney and Melbourne chasing that affordable lifestyle, and prices are rising for both houses and apartments very strongly on the Gold Coast at the moment. Jane's asking about North Queensland. What about North Queensland, Townsville in particular? Have you had a look at Townsville?
We haven't ventured that far. Put it this way, there isn't anything wrong with those markets. It just hasn't been a big focus for us. We do typically look for a decent sized population. We're looking at maybe 100,000. I know Townsville's a big place as well, but we're looking at least 100,000 as a population base typically before we start to look at a lot of areas as a regional centre. I do think you could probably make some good money in Townsville. We just think that the areas that we've been focusing on with a population of 100,000 close to another CBD, nice and close, typically ticks the boxes. But look, we can't be the experts on everywhere, and it's much for much. So I think you could pick any coastal city around Queensland at the moment, and if they haven't experienced price growth in the last 12 months, something's going wrong.
Yeah, and Townsville's got this massive infrastructure spend in the works as well. The one thing about those markets that you need to be aware of is because of the weather events, the insurance premiums are so much higher, and that's something you keep in mind. A number of people have asked about Perth because we've talked about Brisbane, we've particularly talked about Adelaide as one of those smaller capital cities. Have you spent much time thinking about Perth, Tim?
It's certainly on the radar for us again. Like it's obviously had its day in the sun many years ago, and it's had some not so fond years. It's certainly an emerging market again now. I still do think that we've got better value outside of Perth, but it's certainly a market that people can make money in.
Sure. A few people, including Dilip, asking about the Hunter region, and there's a region with lifestyle, affordability, proximity to major cities. What are your thoughts there, Tim?
I think, like many areas at the moment, that the New South Wales, I'll be more specific, a lot of Sydney-siders are getting out of the city, and Gold Coast is certainly one that's been taking off because of that. The other one is the Hunter Valley. So regional New South Wales, if you look at the price growth there over the last 2 quarters alone, I'd put this in the same commentary that I did with Brisbane before. Yes, it's a good area, but make sure that you're not overpaying. It's a very popular area at the moment. And obviously, the more eyes, I'm sure there's a lot of people on this call today that are turning up options or putting bids in online at many areas at the moment. And they're sick of getting blown out of the water. But it's bound to happen in these areas, and I can say I've had the same thing myself. But one thing I would say is anytime that you're looking to invest into an area, have your price set. Don't go over it, especially as an investor. If you're an owner occupier, it could be a bit different because you're buying with your eyes and your heart. But as an investor, you stick to your price that you going in at that represents value, and don't budge higher than it. And if you don't find it in the areas that you're looking, you might be a bit late. So try to find the next one.
Yes, it may well be the most important point that we've made today, Tim, because I think there's way too many people are getting caught up in that frenzy and the competition that's the market, and just going beyond their budget and perhaps going beyond local values to secure a property in the face of strong competition. I think it's a time where people need to exercise a little bit of patience, and again, have some professionals on your team to help you through the sort of markets that we're dealing in at the moment.
That's right. I mean, we've got, as you know, professionals in this space, we've got access to desktop valuations, trends all over the country. So anybody is on this, even if it's not one of the areas I've talked about today, if they wanted to get some reports on areas and things like that, more than happy to for them to reach out and email me, and I'm happy to do the reports in different suburbs and that. But there's so much data out there that you can actually, if you analyse it properly, can tell you what you should be paying for a place. And I must say, in the established market space at the moment, in any of these areas, properties are lasting 2-3 days on the market before they've got a contract on them. So, and it's selling well over reserve price. So don't fall into the trap of that FOMO trap where you pay higher than you probably should. The reason being is that you're an investor, and your investor should be looking at the numbers. So know your numbers, know exactly what you want, and if you don't get in that area, look for the next one.
All right. We're just coming up for the hour, and just before we wrap up and tell people how they can get in touch with you, Tim, if they want to follow up, we might just focus as a final question from the one from D Wong, saying, with organisations pushing for a return to office for work, do you see sea change and hill change markets, their growth plateauing or even reversing? Because that's very much what we're talking about today. What's the longevity of this trend?
Look, I think that trend that I was just talking about of places selling way over reserve price, and the sheer volume of sales and high price sales will start to curb. I can't see them necessarily going backwards as a market, on seeing any negative growth there, at least for the next 12 months. I think if we're going to see any trends nationally of that, that bubble burst, so to speak, it's probably going to be 2023. I still expect to have strong growth throughout the next 12 months. But certainly, those regional areas, you've got to keep in mind as well, they don't have the development approvals that we do in the city. They're not building up like we are in the CBD. So you are always going to have a limited amount of properties that people can buy. And I think that's going to, serve them well as far as price growth into the future. It might slow down a little bit, but I don't see it going backwards, at least in most markets as a generalisation.
Yeah, and I certainly think this trend has considerable longevity. It's actually been going on far longer than most people realise, and I think the forces driving it will continue. It's about technology, it's about lifestyle, it's about affordability, and I think it's going to be a driving force in the market for the foreseeable future. Yeah. Tim, perhaps you could finish by just letting everybody know how they can follow up and make contact if they'd like to do that.
Sure thing. So I've got my email on the bottom left there, tim.graham@reventon.com.au. So anyone's welcome to do that. Also have a QR code on the screen there. If you did want to book in a free 30-minute chat with me, simply put your camera on your phone onto the QR code. I think everyone's pretty familiar with that, with the check-ins that we have to do these days. But that'll take you to a link to my calendar, and anybody's welcome to throw in a 15-30-minute conversation in there. If you just want to have a chat around what your plans are, certainly no obligation to go to the next step, but more than happy to help. So yeah, thanks, Terry.
All right. Okay. Thanks, Tim. Thanks for a great presentation. And I really enjoyed the discussion. It's been great to get your perspective on all this, because we've certainly been a strong advocate of the smaller cities and the regional areas for some time. And it's very clear that you've done a lot of work on it. There's a lot of research behind what you're doing at Reventon, and it's been really great to get that perspective with the numbers that you've also got. And I also like what you've been doing with the slides today with the technology. Very crafty.
Well, we had 12 months in lockdown where we thought we might as well utilise this time.
So I do urge those of you watching today, if you've got further questions, and we didn't get to answer all the questions that people put in, apologies for that, but we've run out of time. If you'd like to follow up and make contact with Tim, members of his team, I do urge you to do so. It doesn't cost anything to have the discussion in the first instance, and I think it's a good step for people to make if they're considering property investment. So thank you, Tim Graham from Reventon, and thank you for everyone for your participation, for your comments and questions. Everyone who's registered will receive a copy of the broadcast as well. You'll be receiving that in the next 24 hours or so. So thank you once again, and Tim, let's do it again soon.
Sounds good, Terry. Thanks so much. Appreciate you having me.
Okay, bye for now.